Hello, this is Joe Pryor at the virtualrealestateteam.com in Oklahoma City. It's been a couple of months since I've done any videos. I've been away, and partially it's the duties I have for the National Association of Realtors has me traveling quite a bit right now, but also business is doing exceptionally well in Oklahoma City, and so that's taken up a lot of my time. But I'm back, and I want to update you first off on what the market conditions are in the Oklahoma City market. Now, Oklahoma City doesn't change that radically from one month to the next, but it's important to note certain things that are happening. And I think the first thing is energy. Energy is extremely important to Oklahoma, not in the way it used to be back in 1980s, 1970s, where it was very dominant in our economy. But we do know that energy prices last year especially dropped quite a bit. In other words, we were at $75 a barrel and it went below $30 a barrel, and this impacted Oklahoma. And even though only 5% or less of Oklahomans are employed in the energy or energy-related fields, it is something that changes tax revenue, for instance. People spend less money on oil sales going to the governments, the local and the states. And so that has had an effect on our economy, although a world-class economist once said here this year that this is the best oil bust you'll ever see in your life. I mean, the economy is vibrant, the unemployment is low, but again, we could use that tax revenue to support the schools, to support all sorts of things that the public sector does. But what's really cool for us anyway is that as of Friday, oil was back up to about $48 a barrel. There's an agreement in terms of OPEC, that they have to do something about limiting production. The economy is better in the United States. We've had 78 straight months of job increases, which is historically the highest ever in terms of continual job increase. And so the economy is getting better, and when that happens, energy is being utilized. And so right now we're looking, by the end of the year, it's estimated at least $53 a barrel on the futures market. And in Oklahoma, that's a pretty profitable deal. Devon Energy, one of the most powerful independent oil producers in the world, says that in Oklahoma, that at $44 a barrel, their return on investment is about 40%. And that's pretty fantastic profit. So at 53 or heading towards 60, it's extremely strong. This does mean more hiring. This does mean more confidence in the market. Now, from the point of view of housing, it's vibrant because of so many other sectors of the economy going on and doing well. But, there is a few exceptions, and the high end of the market still is languishing, mainly because some of the high-paying jobs in the energy industry are not really coming through in the way that they used to be. And it's a little slower anyway because it's pretty rarefied air in terms of qualifying or having cash for $1 million home. But that is something that we've seen a lot of slowdown on. We hope that recovers as the energy industry recovers, because so many corporations, large corporations, are here in Oklahoma City. Now, the other aspect that I've really noticed over the last year, and this really caused me to do a little bit more research, is I saw an article. There are 3 major metropolitan areas over 1 million that have seen strong increases in the number of homes for sale, the inventory of homes for sale. And one of those is Oklahoma City, and it said, well, Oklahoma City has experienced a 20% increase. And I thought, well, maybe 8 to 10% might be what I expect. But I went back and reviewed all the statistics month to month from last year to this year, and they're pretty well correct. Not always, but a lot of the months there has been a 20% increase. Now, in terms of what we call the absorption rate, that has slowed things down a little bit. In other words, that's the amount of time it takes to sell all the inventory in the market. It was below 200,000 about 3 months, 2 months. Overall, it was a little bit higher, but right now it's running about 4.32 months. 6 months is a neutral market. So we're still slightly biased towards the seller, but this is good news for the buyer because you've got more choices right now. You might be able to get a little bit better price than you were before. It kind of dampens down the 5 to 6% appreciation we had for a couple of years because of low inventory, down to our normal 3%. And we really do want to maintain that affordability index because Oklahoma City is still one of the lowest cost of living cities of major cities in the United States, coupled with housing at a reasonable price, more homeowners. This is good for the economy. It's good for the society. So essentially, to sum everything up, all sectors of the economy have been doing pretty well except 2. Government, which is one, because we've been dealing with budget shortfalls partially caused by energy. Second is energy, and it's starting to really come back and be profitable. We're seeing more rig counts. And so this is going to correct some of the problems that we had in the public sector. So I'm looking for a really good fourth quarter. I'm looking for a really terrific 2017, depending on how interest rates go, because right now it's off the table with the Fed until December. So expect a good market with a lot of inventory, a lot of choice, low interest rates. It's a good time to really be looking at real estate, at least doing the research, because Oklahoma City is very, very strong at the moment. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.